Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about JAIIB accounts paper unit number 26, that is leasing, lease financing. That is unit number 26, module number C. That is the, as for revised syllabus, this is the latest topic and later new topic introduced under this. For the May examinations, JAIIB, we are conducting online classes. Interested members are requested to contact on this number. Point number 1, equipment leasing, leasing fine. A lease is a contract. It is a contract between the lessor and the lessee, which one party agrees to allow use of its property to another property. One party is giving his property to another party for a specific period of time. One party agrees to allow use of his property to another party for a specific period of time on agreed payment terms of lease rentals. Lease rentals agreed. Point number 2, finance lease and operating lease. Finance lease. What is the meaning of finance lease? It is also known as capital lease, sale lease or long-term lease. Capital lease, sale lease or long-term lease. Under this finance lease, the lessor, the asset owner and the lessee agree that the ownership of the leased assets will be transferred to the lessee on completion of the lease contract period. At the end of the lease contract period, the ownership of the asset is going to be transferred from lessor to the lessee. As per Ind AS 116, what is the meaning of a finance lease? A lease is classified as a finance lease if it transfers substantially, fully all the risks and rewards associated incidental to ownership of an asset, underlying assets. So all the risks and rewards are going to be transferred from lessor to lessee. That is called finance lease as per Ind AS 116. What is meant by operating lease as per Ind AS 116? A lease is called as an operating. It is short-term lease. It does not transfer substantially all the risks and rewards incidental to ownership of the underlying. It means it is a short-term lease, month-to-month or year-to-year lease, and by the end of the lease, the asset is not going to be transferred. Normally, this is a short-term lease for short-term lease. Whether it is a finance lease or operating lease depends upon the substance, material or the material of the transaction rather than which form of the contract. So, what is the substance in the lease contract? A wet lease, point number 5. Wet lease is one, the lessor, asset owner, operate the equipment during the lease period and is also responsible for insurance, maintenance, etc. Example, leasing a aircraft along with crew member and maintenance and insurance, that is called wet lease. Even after lease, the lessor, asset owner is maintaining all the things. Dry lease, only the lessor will give the asset to the lessee. The entire responsibility will be taken care by the lessee. That is called aircraft without crew and anything. Just they will give lease for aircraft. This is point number 5. 6. Under a sale and lease back. First, the asset owner is going to sell the asset, and after that they are taking it on lease basis. The asset owned by one party is sold to the other party, and simultaneously after sale again the same asset is going to be taken back on lease. This is also happening. Point number 7, in domestic lease, all parties, lessor and lessee, both are domiciled in India, local. If any one party is not domiciled in India, it is called as international lease or cross-border lease. An international lease may have implications, so many risks, including country risk, currency risk, some other export cross-border risks are also there. Country risk, currency risk and other risks also there. This is point number 7. 8. What are the general contents of a lease agreement? Particulars of the asset, particulars, what type of asset they are taking, description, nature of the description of the asset, what is the lease period, what is the effective date, end date, renewal terms and conditions, how much initial security the lessee had to deposit with lessor, lease rental payment terms, transferability of ownership in the case of financial lease after end of the lease period, repairs and alteration, we had to bear that expenditure, default, if there is a default in payment of lease rentals, where they will go for arbitration and settlement. All these are the important terms, conditions. 8. What are the main reasons, what are the benefits for choosing lease as an option to get assets? Why the parties are choosing as lease to get the assets? The borrowing capacity is not reduced. The lessee borrowing capacity is not reduced. It means the lessee debt equity ratio is not going to be impacted. It means through leasing, the lessee is preserving his future borrowing capacity, is preserving his future bank borrowing capacity. So this is one of the debt equity ratio, no impact on debt equity ratio in the lessor books, in the lessee books. Number 2, you will get full finance, that is there, lessor. Now, avoid risk of obsolescence, this is also passage of time, the asset is useless, that is also. Tax advantage also it is getting in the books of the lessee. Whatever the lease rentals they are paying, that is booked as expenditure, it will save the tax burden. It is very flexibility in the financial planning and the cash flows also. When compared to bank term loans, leasing conditions are, terms and conditions are less restrictive, terms and conditions are covenants. These are the things. 10. GST. As per section 7 of the CGST Act, lease is covered under the meaning and scope of supply and it is taxable. Lease rentals are taxable as per lease, section 7 of the CGST. Lease is covered with the meaning of scope of supply and its tax. Income tax implications in the lease. In a lease transaction, the lessor is eligible for depreciation on the asset. In the lessor books, he will take the depreciation as long as you own the asset. The lessee therefore will not be claim the depreciation. In sale and leaseback transaction, income tax rules permit depreciation on the sold asset depreciation value rather than actual. Entire lease rentals are taxed as income in the books of lessor. In the books of lessor, whatever the lease rentals he is getting from the lessee, that is as income. In case of lessee, he is entitled to treat the lease rental payments as expenses. So lessee is entitled to treat the rentals as a less expenditure. his tax liability to the testant is going to reduce. So these are the implication, some major important points in the equipment leasing and finance accounts unit 26 module C. Thank you very much friends for extending support to our channel. Thank you very much.